Salesforce stock can be a cornerstone in your portfolio really over the next 5 to 10 years. We'll jump into their Q3 results and I'll show you exactly why that is. We'll also take a look at this one from a technical perspective. Likely it will put up a big green candle tomorrow and has broken over a key level of resistance. We'll outline some areas where I think you can come in here and acquire Salesforce for an attractive valuation. As always, if you're new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would mean a lot. Salesforce Incorporated, ticker symbol CRM, is up just 50% over the past 1 year and is up over 70% year to date. That is staggering gains, and that actually does not include gains in the after hours. I'm seeing up over 8.5%, trading at right around $250 a share. They reported their Q3 results and post yet again another stellar quarter. Non-GAAP EPS came in at $2.11. That beat estimates over on Wall Street by close to 5 cents. Revenues came in at $8.72 billion. That was good for 11.2% growth year over year. That was in line with expectations. Non-GAAP operating margins also coming in at 31.2%. Returned $1.9 billion to shareholders in the third quarter in the form of share repurchases. When we take a look at Salesforce's cash flows, we'll see they're doing basically all of their cash flows and more in the form of share repurchases. They also initiate a fourth quarter revenue guidance of $9.18 to $9.23 billion. That is also good for 10% growth in that upcoming Q4. They also raised their full year operating margin guidance up to 30.5% on a non-GAAP basis. And they again raised their full year cash flow growth guidance up to 30 to 33% year over year. So across the board, strong numbers from Salesforce. They came in line with revenues, did beat on their bottom line, and then raised operating margin guidance and cash flow guidance. In terms of the upcoming Q4, they expect EPS to come in between $2.25 to $2.26. Estimates over on Wall Street were a bit lower at $2.18. So again, they also came in with EPS for this upcoming Q4 at the higher end of Wall Street estimates. Now, frankly, moving on to the income statement, this looks absolutely stellar. Very similar to their Q2 results, which we had covered back on the channel roughly 2 months ago. Total revenues at $8.7 billion. Their cost of revenues hardly moved at just $2.15 billion. Last year, we were basically at $2.1 billion. And so our gross profits rose roughly in line with our revenues up to $6.5 billion. Last year, we were at $5.7 billion on that gross profit side. In terms of operating expenses, again, Salesforce doing a phenomenal job controlling operating expenses, R&D ticking down, marketing and sales ticking down by roughly $200 million, G&A also ticking down, and then they're still experiencing a small restructuring charge. Looks like the majority of that was realized in the first 2 quarters of this year. In the right-hand column, we have the 9 months ended. And so we see this restructuring charge is beginning to dwindle. We have a footnote. We come down here and see in January 2023, the company announced this restructuring plan intended to reduce operating costs, improve margins. That is key, improve margins, and advance the company's ongoing commitment to profitable growth. And this reduction plan includes a reduction of the company's workforce and exiting out of real estate office spaces within certain markets. And certainly we are seeing that from Salesforce. They're controlling costs across the board. They did this in Q2, and again, they're doing this in Q3. And what that does is allow their operating incomes to absolutely explode, up from $460 million same time last year, now all the way up to $1.5 billion. From that, we pay some income taxes and we come to net income of $1.2 billion. Again, that is over a 5x from same time last year. It seems like I'm glossing over these numbers, but frankly, Salesforce put up numbers very similar to these back in Q2, and they looked stellar then, and they look just as stellar now. This is a company that Mark Benioff, the CEO of Salesforce, has right-sized, and it's absolutely showing through. We see as a percentage of revenues, their gross profits did expand roughly 2 percentage points at 75% gross profit margins. And then you see their percent of operating expenses as a percent of revenue actually tick down substantially, now down to 58% of their revenues are their operating expenses. And so what that did is bolster up their net income margins all the way up to 14%. Last year, again, we were just at 3%. Very similar story to what they reported in Q2 with expanding gross margins, expanding operating margins, and then expanding net income margins. Frankly, phenomenal cost cutting over at Salesforce. In terms of their balance sheet, this is also looking absolutely stellar. You see they're sitting on nearly $6.4 billion worth of cash and cash equivalents. Their accounts receivables did tick down by close to $6 billion. And so we come down and see that their unearned revenue ticked down roughly in line with that. And so nothing to really worry about. Looks like that unearned revenue basically turned into realized revenue. And so their accounts receivable ticked down the same amount, sitting on close to $91 billion worth of total assets and just $32 billion worth of total liabilities. This company is very well equipped in order to possibly continue to do more M&As, continue to buy back their stock and pay off their debt. And frankly, they don't have a ton of debt on this balance sheet, sitting on just $8.4 billion worth of non-current debt. Last year, they were at $9.4 billion. So again, they are continuing to pay off that debt, and they can likely keep doing that considering how strong their balance sheet looks and frankly how strong now their net income looks. Speaking of net income, we bring down that $1.2 billion down to their cash flows. We get to add back some stock-based compensation, some depreciation, and we get to very strong operating cash flows of $1.5 billion. Last year, again, we were at $313 million. Guys, when you 5x your operating cash flows, you have a lot more wiggle room. You can do a lot more with that cash. And it seems like Salesforce is wholly focused on repurchasing their common stock. You see they spent nearly $1.9 billion on the repurchase of common stock. That is actually exceeding their operating cash flows. And so they spend not just their cash flows, but even a little bit of cash, close to $300 million additional in order to repurchase their common stock. Looks like they did not pay off any debt in this most recent quarter. They have done most of that over these previous 2 quarters. And so Salesforce really focused on repurchasing their common stock. And frankly, that is probably putting some pressure on a stock that is up over 50% year to date. In terms of their full-time headcount, we see over the last really year, Salesforce has been focused on reducing their headcount. That was part of their restructuring plan. You see on a year-over-year basis, this headcount has actually come down substantially, down by roughly 9,000 employees. But if you look at it on a sequential basis, quarter over quarter, this was actually an increase for the first time really over the last 4 quarters. Salesforce looks like is done with the majority of their restructuring and is now back to increasing their headcount, increasing their workforce in order to continue growth over at the company. And one thing I do want to highlight is while the numbers over at Salesforce on their earnings side look great, while they're lapping a period of frankly not great growth, the earnings for Salesforce look fantastic as they're growing at a rapid clip. Now, as they lap this same period next year, the earnings growth will frankly be fairly modest, closer to somewhere between 10 and 15%. Wall Street expects closer to 16%. And so while they won't be growing at the same 50% clip on their EPS side, their growth will come down substantially. So while that won't stay, I think what is here to stay over at Salesforce, though, are their net income margins. These margins have expanded for good, in my opinion. I don't see them falling back down to 3%. I think this company has right-sized in the way where they've figured out how to keep these net income margins and operating margins higher than they were before. They likely will continue to grow their headcount at a modest clip, and although their revenue will grow faster, they should be able to maintain these net income margins, if not expand them by a couple percentage points over the next few years. Moving on to the technicals for Salesforce, this one is likely going to come in here and put up a big green candle tomorrow. I have put up this fake candle to kind of show you where shares are trading out, closer to $250 per share in the after hour, almost identically exactly at $250 a share. This one has now broken over a key level of resistance at $235. This acted as resistance back in July of 2023. And so now Salesforce, if it will come in here and close above this level, it has broken, frankly, a key level of resistance. And frankly, there's not a whole lot of resistance above it at this point. It can honestly come up here, retest highs at 270, and then honestly has a lot of clear sky to come back up here, retest all-time highs back closer to 280, 290, and $300 a share. In my opinion, I think if Salesforce can continue to show strong momentum, there's a very real possibility it does continue to go higher throughout the end of this year, trade closer to $280 a share. Also, a very real possibility that it does come up here and then kind of backtest this level at $235 a share and then begins to trade sideways in this upper channel between really $235 and closer to $265 a share. You see over the past few months, it's been trading sideways in this sort of lower range between 200 and 235. It can very easily, after these earnings, come up here and begin to trade sideways at these levels. In my opinion, I honestly would look to come in here and buy Salesforce in the lower end of this channel. It's hard for me to come in here and justify buying this stock when it's trading at close to 28 times a forward earnings multiple. This is the same thing that's been holding me back from a stock like Intuit. These are two fantastic tech stocks. We covered Intuit yesterday, and the one thing holding me back from that stock is, again, just the valuation. These companies are both very similar in the sense that they have very sticky business models and cater to that small and medium-sized business. But again, it's just hard for me to justify coming here and picking up shares of Salesforce nearing its all-time highs, closer to 28 times a forward price to earnings. In my opinion, closer to this $206 level. If it comes down and comes back in the lower end of this channel, that is when I would really become interested in picking up shares of Salesforce. If anything, if you do own Salesforce, I would rather come in here and look to offload my shares as it comes up closer to $290, $300 a share, as frankly at that point the news around Salesforce will be ultra bullish, and that is where I would look to rather sell instead of being a buyer for Salesforce.com. That was my take on Salesforce. Frankly, a very, very strong company, very strong quarter. It's just the valuation that's honestly still a bit too stretched in my opinion. If they can continue to maybe trade sideways for the foreseeable future and grow into this valuation, that would also be acceptable and would make this stock much more appealing from a risk-reward perspective down the road. Let me know your thoughts with Salesforce. Are you coming in here and picking up shares at closer to $250? As always, thanks so much for listening, and I'll catch you guys in the next video.